This program provides education, not advice. Sponsors pay a fee for endorsements and interviews. See the truthayf.com disclosure page for details.
This is where technology, innovation, and personal finance come together.
This is the truth about your future with Rick Edelman.
It's Tuesday, January 30th. Are you interested in alternatives? Alternatives to what? Well, there's the basic investment categories, stocks and bonds. But lots of investors are interested in alternatives to those traditional asset classes. Alternatives are a big deal. Lots of asset management firms specialize in these investments: commodities, energy, real estate, crypto. Globally, individuals have 5% of their wealth in alternatives. 60% do it to improve their overall portfolio diversification. 25% think they're going to get higher returns. The problem is that alternatives are complicated products. They're typically limited security offerings that involve far more paperwork than just opening a brokerage account. They often incur high fees, limited liquidity, large minimum investment amounts. But fund managers say they have found a way to make all of this better: tokenization. They say that blockchain technology can streamline the operational processes, and this will let them make investments available to a larger number of investors. Tokenization can also improve liquidity and collateralization and facilitate portfolio customization. The net result? It's projected that tokenization will generate $400 billion in additional annual revenue for the alternatives industry. So what exactly is tokenization? It simply refers to representing ownership of an asset as a programmable piece of computer code. This is known as a smart contract on a blockchain ledger. Ethereum is the leader in this space. Using this technology, you can generate automated, instantaneous settlement. It's a huge improvement over the current method that involves multi-party processes with everybody having their own siloed data that's expensive to reconcile. With tokenization, data management is easy. Illiquid investments become liquid. Blockchain records can easily and reliably prove ownership of collateral, and you can create innovative new uses like limiting exposure to certain industries or automatically rebalancing or automating capital calls. Capital calls are a major issue for alternatives because, when you buy an alternative investment, you don't typically invest all your money all at once. You invest it slowly over time as they identify investments for you to buy. Well, those capital calls are a nuisance. They send them to you without you knowing it's coming, and you have a limited amount of time to send them the money, or you void much of your investment. But when you have cash kept in stablecoins, the tokenization can automate the capital calls, making life easier, automated for everybody. All told, tokenization could increase revenues for the alternatives industry, like I said, by $400 billion a year, according to JP Morgan. And instead of people investing only 5% of assets in alternatives, this could rise to 20%. Yeah, it's amazing. With only half as many stocks available publicly as there were 15 years ago, investors are looking for private equity, something that you can obtain through alternative investing. This represents a new investment category that might well one day be coming to you via your financial advisor. On tomorrow's show, I'm going to give you the latest on Alzheimer's, new diagnostic tools, new treatments, and a shocking new way to reduce your risk that you might already be doing.
Support for Rick Edelman's podcast comes from Invesco QQQ. What do all the greatest innovations have in common? Agents, people who participate in progress by supporting cutting-edge ideas. Invesco QQQ is a fund that allows you access to innovators of the NASDAQ 100 all-in-one fund, so you don't have to be an inventor to help create what's next to come. Anyone can become an agent of innovation with Invesco QQQ. Learn more at Invesco.com/QQQ. There are risks when investing in ETFs, including possible loss of money. ETFs' risks are similar to those of stocks. Investments in the tech sector are subject to greater risk and more volatility than more diversified investments. The NASDAQ 100 Index comprises the 100 largest non-financial companies on the NASDAQ. You can't invest directly into an index. Before investing, carefully read and consider fund investment objectives, risks, charges, expenses, and more in prospectus at Invesco.com. Invesco Distributors, Inc.
Cutting-edge investment information delivered in plain English.
This is the truth about your future with Rick Edelman.